Welcome to today's session on evaluating your property management, tips and tales. Today's presenter is Carl Henderson. Carl served 2 terms on the ONFA Board of Directors and served as the president from 1993 to 1994. He is the recipient of the 2001 Sybil Furnett Outstanding Leadership Award, and he is our go-to guy when it comes to property management and board relations. So I'm going to turn the presentation over to Carl.
Thank you, Susan, and good afternoon. Nonprofit housing providers need sound management to be successful. This usually means hiring staff or a property management company to look after the day-to-day operation of their housing portfolio. So if you've decided to hire a property management company, or you've already done so, then this presentation is geared to you. Nonprofit boards have serious fiduciary duties as stewards of a public asset and formalized responsibilities to meet their mandate of providing affordable housing and, in some cases, supports for tenants. It is the role of the board to ensure that the nonprofit corporation is managed using sound business practices and policies and procedures that conform to relevant legislation. Over 40 laws regulate your housing operation. You don't have to know them all, but your property manager has to be aware of them and ensure that you're in compliance with them. The housing portfolio needs to be maintained in a good state of repair and fit for occupancy. This is crucial to the health and safety of your tenants and visitors. The needs and concerns of your tenants have to be responded to effectively and efficiently. And this is important if you want to avoid significant turnovers and vacancy losses in your housing. The corporation needs to be operated in a fiscally responsible manner, and the board is responsible for directing and monitoring staff or the property management company. This is an essential task for the board and one that we are going to talk about today. If it's done well, your other responsibilities listed here should be met. So the process of evaluating your property management company starts before you actually hire one. It is through the hiring process that you establish the framework for how you will direct and monitor their work. The criteria that you set out in the RFP and management contract form the basis for your evaluation of their performance. These criteria should be both quantitative and qualitative in nature. The RFP starts with clear expectations and targets being set by you and a process for assessing their work against those criteria. By doing the upfront activity of direction well, the follow-up work of monitoring and evaluating becomes simpler and more effective. Some boards think that they will have less work to do if they hire a professional property management company. Do you agree with them? You may not be responsible for overseeing staff, which can be time-consuming, but directing, monitoring, and evaluating your property manager can be just as difficult. A lot will depend on how much work you do up front and what you have planned along the way. The work that you do in this area is important because you give up a certain amount of control over day-to-day activities in exchange for what you hope will be a more professional approach to service delivery. This is not always the case, and it's up to you to make certain that it does happen for your clients and for your organization. No surprises governance makes for a better process and a better outcome. To ensure a positive outcome, you need to provide your property manager with clear direction, set out clear expectations and targets, and monitor and evaluate their performance. So how do you do that? You start with a solid and comprehensive request for proposals. In it, you need to be specific about the services that you require. This is where you will also spell out your expectations and criteria that you will use to evaluate your property manager. you have to decide what is important to your board. So some of the elements that are in the RFP are noted here. As well, this should go to a minimum of 3 companies, and you can get lists of property management firms, often from other nonprofit housing providers who might be already purchasing the service, or from service managers. So what is important to your board? Is it a high level of tenant satisfaction? What about low turnover, low vacancies, or low rent arrears? Or is it significant operating surpluses so that you are well positioned for the future? It's your decision. Some criteria will be quantitative with clear measurement parameters. Others will be qualitative and rely on expressed opinions or degrees of satisfaction. Details of the services that you require and your expectations of performance in these areas form the basis for the agreement that you will enter into. So what are some of these criteria that I'm talking about? Quantitative criteria can be clearly measured with numeric or monetary values. So examples of these are vacancy losses, bad debts, rent arrears, units turning over, market rents and rent incentives, non-rental revenue, operating surpluses, returns on investment, maintenance cost per unit, administration cost per unit, response time on work orders. So these are just some examples of items that can be, for which a monetary or numeric value can be assigned. If you're not certain about what represents good performance, you can ask other nonprofit housing providers. Most are willing to share this information. You can also ask your service manager whether they have any general data on these performance criteria. Qualitative criteria are ones where the values are difficult to establish and usually rely on personal opinion or external views. Some examples are quality and timeliness of reporting, adherence to legislative requirements, the quality of preventive maintenance, the operational review success or issues, tenant satisfaction, tenant complaints, staff complaints. For these criteria, you may have to establish goals and over time see how realistic they are. However, continuous improvement should always be a goal for your organization. This is a list of some of the information that you should require bidders to submit. They're all necessary, but one of the most important requirements is the submission of a plan for how the bidders will manage your housing. Their ability to deliver on some or all of your criteria and expectations will depend on how they structure the day-to-day operations. There are different approaches to management, not all of which are effective in achieving the goals that you may have set. So when I say different ways to operate, for example, some property managers employ superintendents on site, and they may be semi-skilled or highly skilled individuals, and the amount of work that they can do within their job description will have an impact on your bottom line. The more that is contracted out, the more it's going to cost the organization. So looking at how they deliver service will be an important aspect of the evaluation of the, initially of the bidders and then ultimately with respect to their performance. So you want to review this aspect of the bids very carefully. Does it seem likely that what you hope to achieve as an organization can be met through their management plan? And have they talked about how they will meet your expectations and goals? These are important when you go through this process of hiring. So the board is responsible for ensuring that the nonprofit gets quality management at a reasonable cost. The lowest bid is not necessarily the best. It is up to you to get the highest value that is reasonably possible for the dollars that you're going to spend on property management. To do this, you need to assess their ability to meet your expectations and criteria and to manage your resources in the most cost-effective manner. Also look for the value-added aspects of bids. These can sometimes be the deciding point between bidders. So for example, are their staff able to represent you at the landlord and tenant board or small claims court, and is it included in their bid price, or will they use paralegal staff, which will cost you extra? There are many other aspects that can add value, and you need to ask the bidders to be clear about these in their presentation and in their submissions. Make sure that you conduct interviews. This is such an important aspect of the process. You want to meet with those bidders that you're considering and use this opportunity to ask questions that will clarify their ability to meet your goals, and make sure that they understand how you will monitor and evaluate their work. The contract for property management is necessary in order to keep the respective roles and responsibilities clear and well defined. The contract will outline all the details of the working relationship, and some of them are noted here. You have to be clear about your expectations. Remember, the less you specify in the contract, the less the property manager is likely to do. After all, they are in the business of making a profit. Both ONFA and SHSC have sample requests for proposals and property management contracts that form the basis for a good working relationship with your property manager. Don't be afraid to improve on them by adding details about your expectations and the criteria against which you will evaluate. These can be in the form of an appendix or a schedule to the contract. Some of the standard clauses in the contract are noted here. So they include the term and how renewals will occur, the management fee, spending authorities, if there are some for the property management company, termination clauses, and make sure that you include one for both parties, because a contract without both is not legal. And so you want to make sure that both parties have rights, similar rights with respect to termination. Although they don't have to be identical, they should be similar. An indemnification clause and mandatory insurance, conflict of interest, schedules including a description of your portfolio, and as I mentioned, other criteria and requirements that you're intending to impose, and also privacy requirements. The details of the contract provide a basic list of activities and requirements that you will use to measure and evaluate your property manager's performance. By signing the contract, both parties can be held accountable to what they have agreed to. If you have an agreement with your local service manager under the Housing Services Act, it should be referenced in the contract and appended to it. You are responsible for compliance to that agreement, and you want to specify that your property management agent is as well. So some of the things that they may have in that clause, in that agreement with the service manager, would be corporate reporting, financial management, tenant administration, property management, capital project management, and reporting requirements. And many housing providers will have those types of agreements, so you want to make sure that you've included it as part of the process. It's up to you to make sure that your property manager complies with the agreement. Now let's take a look at the respective roles and responsibilities of the board and the property manager. The board is responsible for adopting bylaws and policy framework for operations. The property manager provides program expertise in order to implement the board's policy and direction. The board has to make sure that there is compliance with the nonprofit's own bylaws as well as government legislation. And they also have to ensure that risks are managed effectively. And this is a very important aspect where there's good communication with the property manager to make sure that, in fact, the risks associated with day-to-day operations are addressed and dealt with. The property manager has to make sure that you operate within the legislation that regulates the housing operation. The board is responsible for selecting, contracting with, and monitoring the property management company. They're also responsible for ensuring that systems are in place to protect the assets of the corporation for the use of current and future tenants. The property manager will have delegated responsibility from the board of directors. And so the property management agreement that you signed should, for the most part, specify clearly what that delegated responsibility is and how you will monitor and ensure that it is complied with. The board also has responsibility to advocate, in particular on behalf of your clients or your tenants, but as well if you have staff that are being supervised by the property manager, then you have a responsibility to advocate on their behalf as well when there's issues or disagreement between your staff and the property management agent. Ultimately, regardless of who does what, the responsibility for governing the organization rests exclusively with the board of directors. One of the most important duties of a board is its fiduciary one, which is the responsibility to oversee the organization's resources. For a board to meet its fiduciary responsibilities, it needs the right information. Financial reporting is also crucial to the process of monitoring and evaluating the property manager. It must include measurements of the quantitative criteria that you established, such as rent arrears, vacancy losses, and operating surpluses. So some of the typical reports are the ones that you see here. The income and expense statement, which is a report that details for a period of time the income that you've received, the expenses that have been paid out, and the difference in terms of profit or loss for that period. The balance sheet, which is a snapshot in time that tells you what your assets and your liabilities and your surplus or deficit are at a point in time. So that is a report that's usually at, for example, the end of the month and is very time specific. An investment report, which gives you some information about your investments, particularly if you're a Housing Services Act provider that has investments with Phillips Hager and North or other investments, how well you're doing in terms of performance. A capital budget and work plan, which specifically deals with the replacement reserve and the expenditures and income related to that program. A rental arrears report, which details the amount of money that's owing to you from your tenants, usually both current and former, and hopefully in a way that doesn't invade the privacy of tenants. So making sure that the report doesn't include the names of tenants specifically. You don't need that in order to be able to do your job, but it's important that you know how much arrears you have. And finally, vacancies and vacancy loss, which has an impact on the funding model and an impact on your bottom line.
Carl, I have a question. With respect to these, most of these are financial reports. Excuse me. Would it be a good practice for a board of directors, especially if you're changing property management companies, to have good templates of these documents, and then to require the property manager to follow those templates? I'm just thinking about sort of the board's responsibility to really understand what these reports are telling them so that they can do what they have to do with them. Or do boards generally look to the property management for the format or the templates for these reports?
Usually the property manager will provide something that will give the details of the information that you're looking for. but almost every software program that property managers use has the ability to be modified to make it clear to the board of directors as to what the information is saying. So, for example, the company that I worked for, which was also a property management agent, we had different reports going to different boards, although it was the same general information. It was tailored to make it clearer to them about what they were looking for specifically. So, for example, in some cases they wanted different information in a different format, and we were able to do that using the software program that we had, and the staff had their ability to modify the program. So certainly I think boards need to have a discussion with the property management company if they're not comfortable with or they don't understand the type of reporting that they're getting. Is it possible to have it provided in a different way, or is it possible to have a clear explanation of the information so that they come away with a comfort level that allows the board to make what they feel are informed decisions? So I think it really is important to have that discussion. Most property management agents would be willing to make modifications within reason to try to make it a friendlier type of report that's clearer to the board. But there are some basic sort of information and layouts that are typical of financial statement presentation that has to be, adopted to some extent. But there is some flexibility.
Thank you.
You're welcome. So for a board to, just want to see where I left off here. Sorry about that. So other reports include information about units turning over, an analysis of trends in operations, and this is probably one of the most important ones that can assist the board in making decisions to avoid bad outcomes. So if something's happening in your operation and it's trending in the wrong direction, the analysis that provides that information to you allows you to make timely adjustments to the work plan that can avoid bad results. So that kind of information, if that isn't happening from your property management company, then you need to be talking to them about how that can occur so that you actually can make those constructive changes in a timely manner. The other important one is the timely remittances to Canada Revenue Agency if any staff are employed directly by the nonprofit. And the reason is that directors can be held personally liable for unpaid government remittances. So this is one area where if you do have your own staff, you want to make sure that you're getting information reported to you that makes it clear that these payments are being made. Remember as well that reports to the board must be timely. If there's decisions that you need to make to affect outcomes, they need to be available before it's too late to have a significant impact. In addition, the board has a responsibility to know how to read and interpret financial reports. So this is the point that we were making earlier. If you're not able to do that, it may be necessary to try to arrange for some training for the board, or it may be necessary to have the reports modified in a way that makes it clear. But ultimately, you have to be able to understand them, you have to be able to interpret them, and to be able to make decisions and take action based on an informed position for the organization.
Carl, is either the format of the financial reports or statements, the types, and when the board would like to see them, sort of how long prior to their board meeting, or if it's a quarterly report or an annual report, is that something that you would put into in your contractual agreement, or is that drilling down too far?
No, it's not. Sorry, it's not drilling down too far. In fact, I strongly recommend it. In the contracts that we sign, there's usually a page that lists the reporting requirements, and it will list monthly, quarterly, semi-annual, and annual reports. And it will also indicate for each type of report that's listed what's the detail of information that needs to be provided. The agreement also should spell out the timeliness of reporting. So if you have a board meeting scheduled you should be receiving all of the information that is going to be dealt with at the board meeting at least 3 to 5 days prior to the meeting so that you have time to review them. And I mean, I would err on the side of caution, 5 days if you have a heavy agenda, 3 days if it's a manageable one where you'll have time. As an organization, we always tried to make sure that they had 3 to 5 days and as much time as possible, understanding that there's still reports that have to be produced and so on. The reporting that you get in the current month should be based on information that was finalized at the end of the prior month. The exception would be if your meetings are early in the month. So a lot of boards will meet in the third or fourth week to give the property manager time to create those reports, and then they're looking at data that's no more than, at that point, 3 to 4 weeks old. If you have meetings early in the month, you might be looking at data that's 5 or 6 weeks old, and sometimes that becomes an issue, but not necessarily. It depends on how large your operation is, how likely that changes would occur that would have an impact that might affect your bottom line. So there's a lot of things that go into that consideration. There's also the fact that some boards will meet monthly, others will meet every other month, and some may meet even less frequently. The regulatory requirement is for a minimum of 4 meetings a year. Most boards that we deal with meet 6 or 7 times. And I think for most properties, most projects, that would be a more than adequate meeting. And then making sure that your reports are coming to those meetings in a timely way that allows you to make decisions and carry out your duties. So an additional monthly reporting would include things like work orders, any initiatives that are currently underway, such as energy conservation, new development, or if you have a tenant association, if you have reports coming from them. Any issues with respect to staffing status, if you have employees of your own that are being managed by the property manager. And it's really important, in my opinion, to make sure that you're receiving copies of any directives from your service manager, any operational reviews, or any other information that's of value to the board of directors. So in the agendas that we have with the providers where I was managing, we had a section on correspondence, and this is where these types of issues would come in. We would make sure that anything coming from the Ministry of Municipal Affairs and Housing that was relevant, i.e. your information about benchmarking in the past or information about the current budgeting indices and so on, that information we would provide to the board, as well as service manager directives and anything else that was important for the board of directors and for the organization.
I have another question, Carl. I know when there's on-site staff, a senior staff person, a lot of the budgeting process, and certainly if the organization creates business plans to operationalize the strategic plans of the board, oftentimes that role falls onto the senior staff person, either the executive director or the general manager, or if it's a large organization, with a financial manager. In terms of budget setting, what kind of a role would a property manager play? Would you look in general to the property manager to set the budget for the board's review?
Yes, the normal practice would be for the property manager to take the budget from the prior year and using information that is available to them from the current year's operation and outcomes from the prior financial statements to prepare a draft operating budget that would then be available to the board for review. Ultimately, though, clearly the responsibility for the budget approval rests with the board of directors. If I were a board member, and I've had that role in the past, some of the things that I would be looking at is if I've set criteria, if I've set targets and goals for the organization, are they being met through the budget that's being submitted? So am I seeing the kinds of outcomes that I'm looking for as a director? And if not, I would be asking questions and try to have those answered and perhaps changes made to the budget to make sure that those goals for the organization are being met, because this budget represents the work plan for the upcoming year, and it's critical that that work plan addresses the organization's objectives.
Thank you.
You're welcome. So one of the most important things is to keep the relationship positive. And through that, the board should engage in long-term planning. And those planning activities may include capital planning and looking at the future needs of your tenants. So when I talk about future needs, are demographics changing, and will that affect your ability to maintain your client focus? So this is something you have to consider, because I know of housing providers over the years that have perhaps started out as providing service to seniors only, and were no longer able to do that when the number of applicants fell and there was no one on a waiting list, so they had to start looking at singles as opposed to just seniors in their property. So you have to be looking at the future. Are you going to be able to continue to provide the services that you are to the clients that you are? This is one of those sort of proactive responsibilities that a board of directors has, and this is part of your long-term planning for the organization. Long-term planning also has to look at the financial aspects of the organization to make sure that over time you're going to be able to continue to provide the level of service, the quality that you're currently providing. You want to establish clear lines of authority and communication. Good communication is critical to a positive relationship with your property manager, and you want to keep the lines open even when you're at odds on an issue. It is the only way to get a successful resolution that both parties will work toward. You want to have a fair and open process for handling tenant complaints about staff, whether they're yours or those of the property management company. Remember, you don't want to leave issues unresolved. They can come back to haunt you in ways that can be time-consuming and costly. And examples of this are human rights complaints, or complaints to municipal council, or other issues that might come back at you in legal processes. So the more quickly you resolve issues, the better it is for the organization, particularly issues that are recurring ones. Keep your corporate records and processes current, and make sure that at all times you're in compliance with legislation. The property manager has responsibilities that include implementing and monitoring internal financial controls, and some of these are, for example, segregation of functions and the responsibility for rent collection. They also have responsibility for providing accurate and timely financial reports and other reports that give relevant information to the board to make sure that they can carry out their governance function and their decision-making processes. They're also responsible for paying attention to and sharing with the board upcoming changes in legislation, emerging trends, tenant issues. So if your property management company isn't providing you with, for example, ONFA info-ons, which are really important information coming to the organization, then I would strongly recommend that you do that. The more informed the board is, that's always been my perspective as a property management agent, the more informed they are, the more likely that they'll make good, informed decisions, and the less likely the decisions will come back to haunt me as the property manager. So I can't stress strongly enough the importance of getting that information, good communication, and allowing you to be able to do your job as a board.
Carl, can you explain segregation of functions in a little more detail?
Certainly. So, for example, segregation of functions within a property management company would be if you do have delegated signing authority to individuals within the property management company, those individuals will not be doing, for example, the entering of data into a system or the issuance of checks. So the actual data that produces those checks needs to be handled by individuals that are not having signing authority. And so that's just one example, but there may be others as well. So for example, the collection of laundry coin, you might have one person collecting it, someone else counting it, and so as well you would have two people counting it. So there's different things that can be done in terms of segregation of functions within the organization. Those are usually left to the property management company, but the board is responsible for ensuring that those things in fact happen. So it's usually appropriate for example, the treasurer to meet with or the president to meet with the property management company, one of the senior employees to talk about how these functions are being performed. I know annually when we provide information to our insurers, we have to lay out how that segregation of duties happens so that the insurers are satisfied that there's adequate protection for the organization.
And one more question around that, and you're being patient. You mentioned the treasurer. If there's an active treasurer on the board, is there a closer relationship role? Is there, other than sort of the ongoing or the regular measurements and making sure that you get the reports, do you recommend perhaps a more closer relationship, or that outside of the regularly scheduled board meetings, that the treasurer works with the property management company?
Some organizations have a finance committee, and that committee may deal with specific employees of the property management company to satisfy the financial controls issues and to ensure that the financial statements and the information coming to the board meets the expectations and meets the requirements of the board. And usually that committee is chaired by the treasurer. So in a number of organizations, the treasurer does have more responsibility. They certainly, in most, have responsibility, for example, signing the monthly bank reconciliations and making comments or reports to the board with respect to the monthly financial statements and certainly the year-end financial statements and annual information return. So I do see a more active role for the treasurer, particularly if they have strong financial skills. So if, for example, they have financial training or specific training around reading financial statements, then their input would be much more helpful.
Thank you.
So in addition to regular monitoring, you want to have a process for review that includes at least an annual meeting with the property manager, with the only item on the agenda being an assessment of their performance in relation to the goals and expectations that you established in the request for proposals and the contract. The overall process should include board discussion, so you want to make sure that the board, as a group, have met beforehand and talked about these issues. So basically, having looked at the criteria, having looked at the performance, and drawn up a list of questions or a list of concerns that you have that you want to raise with the property management company. You want to have a process for mediation where you've got disagreement. So it's unlikely that at all times you'll be in agreement. So you want to make sure that you've decided in advance how you're going to deal with areas of disagreement. You want to have, as part of that process, the ability to advocate on staff's behalf. So if you've got, and this is often the case, by the way, in different situations where within our own organization, in others where I've seen through the mentoring that I'm doing with ONFA, where there are staff that are staff of the organization that are being managed by a property management company. So you want to make sure that there's a process for advocating on issues where things happen between your staff and the property management agent. And you want to develop a process for remedying deficiencies. So if you've identified issues, you want to have a way of dealing with those issues so that, and hopefully one where you can work together in a team approach so that it's not seen as a us versus them, but more of we're working together to reach a target or a goal or an expectation of the organization, and how do we make that happen. So if you start your association with the property manager with good processes, this can help you realize a satisfactory performance review and a good working relationship. It can also result in high tenant satisfaction when everyone's focus is on the same outcome and the goals and expectations are communicated to them. So let's recap how the relationship between good hiring practices and the ability to monitor and evaluate performance can allow you to achieve your objectives. So we start by hiring using a request for proposals that has clear requirements and expectations. And again, as I mentioned earlier, the clearer it is, the more likely that the property manager will be doing the work in the way that you want to see it happen and achieving what you hope to achieve. The next step is to design a detailed contract with clear requirements and expectations. And again, while there are some samples out there that are really good, there's still room to modify those documents and include the very specific and personal expectations that the organization has for the property manager. And if you do these things, what you'll end up with is clear requirements and expectations on which to base your evaluations. So establishing this base for a strong working relationship between your board and the property manager will create the opportunity for the board to achieve the outcomes it seeks and provide the highest level of service to your clients and community. If you haven't done the preparatory work, it's never too late to start. It begins with communication and setting out clearly what you as a board of directors want the property manager to do, how you want it to happen, and how you will ensure that it does. So if your property manager doesn't want to work with you, you can always retender and find one that will be a part of your team. Believe me when I say that it's a reasonable expectation on your part. This is not it's not something that a board can't do and can't reasonably expect to have happen. So the sort of processes and the discussion that we've had here, the items that I've talked about, are ways that you can make that happen for your organization.
Thanks, Carl. That was lots of information. Also, would really like to hear from you, and if you complete the very short survey at the end, you will find a couple of little takeaways that I think will not only enhance the information that Carl shared with us today, but also to really focus it on the work that we do specific to our sectors. You will find a sample property management agreement, and in that management agreement, you'll see some of those clear expectations that Carl talked about that you can turn around and then use in your measurement for performance. There is a performance measures checklist that you can download and use. You can make changes to that. It's just a template. Again, Carl spoke at the beginning of the meeting that as a board of director, your long-term plans or long-term goals and outcomes may be different. It may be related to the bottom line, and so that's where you're going to focus your measurement. It may be related on tenant satisfaction. So again, these are just templates, and a great little legislative compliant checklist that talks about certainly not the 40 or so pieces of legislation that Carl mentioned, but certainly the high-end ones, and a checklist that you can use and you can share with your property management company to help to keep you compliant and to keep them delivering what you need them to do on the ground. So again, on behalf of ONFA, I really want to thank Carl Henderson for today's presentation, and thank you for participating today.
Thank you. Please stand by.